Welcome to Illuminati Silver. We tell the truth about silver. Today is Tuesday the 10th of March 2020, and yesterday we published our video entitled Global Equities Fall While Gold and Silver Prices Seesaw, where we highlighted that as at 1720 GMT yesterday, the Dow Jones was down 1,685 points. But later, after the video was published, it closed the day down some 2,013 points, or 7.8%. Gold stood at 1,699, down $5, and silver stood at $16.95, down some 39 cents. We also pointed out yesterday that Brent crude stood at $36, down $9, and WTI crude was down some $8 at $33. The dollar index had also fallen quite dramatically to 94.87, and the gold to silver ratio had risen to 98.4, having briefly touched 100 to 1 earlier in the day. Well, at the time of writing and preparing this podcast, it's currently 2100 hours GMT, so we're running a little late. If we take a look at these various indices, we can see the following. The Dow is now currently up 1,167 points, more than half of yesterday's loss, at 25,018. And the S&P 500 and Nasdaq are up similar percentages at or around 5%. The dollar index is up 1.6 at 96.5. And Brent crude and WTI crude are up just over $3.40 each per barrel. Now gold is standing at $16.48, down some $30 on the day, or down 1.8%. And silver is standing at $16.91. It's fared a little better, down 11 cents on the day, or down 0.65%, thereby reducing the gold to silver ratio to about 97.5 to 1. So what are we to make of this today? Did the markets overdo it yesterday, and perhaps we're seeing a little correction today? Or is this just a temporary reprieve, with a rout due to continue again later in the week? Now, of course, if we had a crystal ball, we would tell you with complete accuracy. But, having said that, we do undertake various forms of economic and financial analysis and give you, hopefully, an educated and calculated best guess scenario, rather than the wishful thinking that we have seen abound the internet in the past few days, or other channels tying themselves to a specific doctrine, particularly some form of chartism or technical analysis, which, though a very useful tool, is just a tool in the overall assessment. Well, before we go into trying to answer that question, we draw your attention to our weekly update published last Saturday and the videos we produced on Sunday and yesterday, just so as to paint the backstop narrative. Now, we've placed links to all three of these in the description box below. We also wish to point out that our caution regarding silver we accept is upsetting one or two subscribers, and has also caused one or two brand new people to join our channel and then make their first comment a derogatory one. We always witness this when we talk down silver, or perhaps not talk it up as much as some would like, and suspect that some of these people come from one of the bullion houses or pumpers' employ. We would absolutely love silver to shoot up to $100 an ounce or even $1,000 an ounce, as we would make a considerable personal capital gain on our holdings, and similarly with gold rising in similar percentages. but we have to call it as we see it. Long term, we are very bullish silver, which is why we are called Illuminati silver. But that will only be, in our opinion, either when industrial demand outpaces the ability to supply, which is extremely unlikely for the near future in view of what is happening around the world, or when gold has risen to such a level where it makes sense to buy silver as a monetary metal instead. But we're also nowhere near that point either. Now, we could lie to you, as all the pumpers do, and pretend that their prices are about to go through the roof any day now. But our calculations and study of the market does not suggest this. Healthy gains, particularly gold short-term for sure. And this we've seen over the past couple of years, and silver has lagged gold, but has also gradually increased. But not to the same percentage, which is why you have such a high gold to silver ratio. But frankly, if anything was going to shoot gold through the roof, it was the 2,000-point fall on the Dow yesterday, especially after recent significant previous falls, and a significant fall in the value of the dollar. And yet, this simply did not happen. Now, we all have to get real here. Financial markets are complicated and interwoven internationally. If global trade collapses, where is the demand for silver going to come from? The answer is from those who regard it as a monetary metal. And that is the traditional investment community? No. They go for gold. Central banks and large investors go for gold if they want precious metals. This is why silver is often referred to as the poor man's gold. Now, that doesn't mean silver won't have its day, but one has to be patient and wait. Rest assured, if silver dips down to our $15 expectation, we will be buyers. Rest assured of that. But meanwhile, gold is still our favorite for the moment, despite the historically high gold to silver ratio. Also, we have to be mindful that markets can overdo themselves on the way down as well as on the way up. So please do not automatically assume equities are going to collapse with a 10,000 Dow Jones index. In fact, when we started writing this podcast, it was before 9 p.m. The Dow Jones was only up around 680 points. So even we had a slight lag in moving to the next part of this podcast, and in that relatively short time it had risen some 400 or 500 points. You see, a collapse of the Dow to 10,000 could happen. But frankly, if it did fall to that level, can you just imagine what must be happening within the financial and geopolitical community to cause such a crash? Probably pandemonium will reign. So be careful what you may wish for. Okay, so what could happen now in the next few days and weeks? Well, we've already pointed out that the European Central Bank will make its decision on interest rates on Thursday. We are expecting a rate cut, but we know that they are already in negative interest rate territory. So other forms of QE may also be necessary. Then on the 18th of this month, the FOMC of the Fed will announce its decision on rates, and many are expecting a further cut of up to 0.5% on top of last week's cut. And then at the end of the month, the Bank of England is also likely to cut rates too. At this time, we shall then have to see and assess how these three major economies interact with one another, plus, of course, China, to determine which currency then dominates. The Fed has a little more to play with regarding cuts than the European Central Bank or the Bank of England, so we may indeed see a further weakening of the dollar, but not necessarily by much more than it has already fallen, or maybe another 2 points on the index. Now, something for you to keep your eye on, and record this in the back of your memory. If the world economies later in the year do not tank as much as everyone fears, and that a mixture of low or even zero interest rates, plus injected liquidity, and potential infrastructure spend, and much vaunted tax cuts or changes in fiscal policy, if all of that happens and combines, enables industrial output to start to increase again, albeit from a lower base, accepted, then silver could be a very interesting proposition. So for when that time comes, keep that thought in mind. Other than that, that's it for now. And please keep up to date as to what is happening in China, Italy, and the rest of the world by following our Richard and Greg channel. Thank you so much for listening. If you haven't already done so, please subscribe to this channel and press the bell sign so that you are notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.